Caely Holdings founder and former non-executive director Datin Fong Nyok Yoon has withdrawn her suit against the company and 6 former directors without liberty to file afresh and at no cost. No reasons were given for Fong's withdrawal. On April 26, Caely announced it had received an originating summons filed at the Shah Alam court from Fong seeking to prohibit the former directors from allotting and issuing new shares in the company through a private placement exercise pursuant to the resolution passed at Caely's AGM held on September 22, 2021. The named defendants then were former Executive Chairman Dato' Wira Louis Ng Chun Huao, former Executive Director and CEO Lim Chey Peng, former non-executive directors Lim Se Leong, Ben Hong Xian, Noor Azrai and Datuk Sri Mazlan Lazim and the company. Besides that, Fong was also seeking the cancellation of the resolution to redesignate herself from Executive Director to non-independent non-executive director of Caely, which also passed at the AGM. She also wanted the resolution appointing Noor Azri on March 23rd and Mazlan on March 29th as directors to be cancelled. Fong resigned from the board on September 15th this year, citing health issues. Noor Azri and Mazlan too resigned on April 25th, a day before the suit, saying they wanted to pursue other personal opportunities. In the suit, she also wanted the special notices issued by Ng on behalf of Caely to the directors of Clasita Malaysia, Caely Development and Marway Industries Malaysia, and all dated April 5th, to convene an extraordinary general meeting to be cancelled. The lingerie maker has been embroiled in several lawsuits and investigations over accusations of alleged embezzlement over the past few months. The International Monetary Fund has raised its GDP growth forecast for Malaysia in 2022 to 5.4% from 5.1%. At the same time, the fund cautioned that for the global economy in 2023, the worst is yet to come. The IMF also projected that Malaysia would grow at 4.4% next year, lower than its initial forecast of 4.7% in July. The revision upwards for 2022 comes less than 3 months after the IMF in July cut its projected 2022 growth for Malaysia to 5.1% from 5.6%. The IMF's projection, contained in its recently released World Economic Outlook Report October 2022, is lower than Malaysia's official forecast growth of 6.5% to 7%. In its report, the IMF also downgraded 2023 global economic growth to 2.7% from 2.9%, with a 25% probability that world GDP would fall below 2%. The IMF cautioned that more than a third of the global economy would contract this year, and in 2023, the 3 largest economies, the US, EU and China, would continue to stall. The IMF said for many people, 2023 will feel like a recession. The fund foresees that global inflation may escalate to 8.8% this year from 4.7% in 2021, before tapering to 6.5% in 2023 and 4.1% in 2024. The IMF said that as storm clouds gather, policymakers need to keep a steady hand. The fund also highlighted that the sharp appreciation of the US dollar adds price pressure to emerging markets, which are already facing a very challenging external environment as capital flows have not recovered and many low-income economies remain in debt distress. Almost half, or 48%, of developers surveyed by the Real Estate and Housing Developers Association said they were not planning any launches in the second half of 2022, with the top reason being unfavorable market conditions. Rehda's latest market outlook survey covered 150 respondents. According to Rehda's president, Dato' N.K. Tong, among the other reasons were delays in approvals from authorities, as well as having projects in the planning stage. As for the respondents that were planning launches, they anticipate launching a total of 7,459 landed residential units, 7,224 strata residential units, and 275 commercial units. The survey also found that developers in Peninsular Malaysia are also planning to launch more residential properties within the 250,001 to 500,000 range in the second half. Even with most future residential property launches priced below 500,000 per unit, Tong highlights that 66% of developers with future launches manufacturers predicted that the sales performance for the first 6 months for these new units would be 50% and below. He says most developers are not hopeful about consumers' purchasing power in the next 12 months, with over 40% of them polling as pessimistic. As for overall property industry outlook in terms of residential sector growth and property sales performance, Tong says most developers hold a neutral stance. Financial services, telecommunications and utility solutions provider Opensys Malaysia is banking on a rebound in its cash recycle machine business segment to drive earnings growth. CEO Eric Lim says the CRM business, which contributes up to 30% of its total revenue, rebounded strongly in the last 4 quarters following a pause due to the pandemic. The group claims a lion's share of over 80% of Malaysia's CRM market. Lim explains that of the 16,000 cash machines, including ATMs, out in the market right now, around 6,000 of those are CRMs. He says this means there are potentially some 10,000 machines that can be replaced with CRMs. Lim adds that Opensys also has its own replacement market where it does about 500 to 600 units a year. Other than CRMs, Lim notes Opensys' other business segments like bill payment kiosks and maintenance businesses comprise the remaining 70% of group earnings. Looking ahead, Lim says growth is also projected for new businesses that the group has been working on, which includes its new Smart Teller Cash Recycler, Buy Solar online marketplace, and Smart CIT Secured Delivery Solution, which have gradually started to contribute to the group's earnings and revenue. Meanwhile, Opensys hopes to attract institutional investors to invest in the company following the transfer of its listing on Wednesday from the ACE market to the main market of Bursa Malaysia Securities. Lim says the transfer has given the group greater access to the broader capital market to fund future growth plans apart from attracting more institutional investors. Multi-level marketing group Zulian Corp recorded a net profit of 7.65 million for the third quarter, down 20% year-on-year due to lower revenue amid weak consumer sentiment, coupled with the impact of the pandemic and rising inflation. Revenue in the quarter fell 10% to 32.96 million ringgit. The group still declared a dividend of 3 cents per share. Going forward, Zulian says its business is closely linked to sentiments of the general consumer market and the fluctuating foreign currency exchange. It says the strengthening or weakening of the ringgit against the greenback will have an impact on the group's performance as all export revenues are transacted in US dollars. Zulian says it ensures its business sustainability by adapting to the constant market demand change whenever possible and is committed to continuously improve its business operational efficiency. Zulian principally manufactures jewellery and consumer products and selling them through a direct marketing network.